Hello everybody, welcome to the TraderMerlin show. As you notice, the music is back to normal. Believe it or not, for a 7-second sample of Everybody Wants Some by Van Halen, I was dinged by Google yesterday for copyright infringement. F you, Google, and Van Halen. You know, I'm paying homage to an amazing artist. Give me a break. I didn't steal a song. I'm not even charging or collecting any money. Anyway, that's my rant for today on copyright infringement. Anyway, we have a little bit of a change today. We're going to have Tillie Allison joining us. We're talking about measuring volatility for better trades. So if you guys have comments, questions, suggestions, you know we've got the big group with us here today. We got a whole bunch, even some newbies. I see Ed in San Jose, a new one. So welcome to the show. We got Terry, Antonio, Brian, Raj, Tomasina, Joseph, Naum, Big Eb. Good to have everybody with us. And let's not forget Joseph, who and Jorge was the first one in the room today. Tillie and I are going to talk about measuring volatility for better trading. And part of that discussion comes from the way these markets have transitioned over the past couple weeks. We've seen some really dramatic volatility. Big down day yesterday, big up day today. The tweet master is back at it again, President Trump, creating lots of volatility. So without further ado, I will get to our guest, the lovely Tillie Allison-Harris. Tillie, how you doing?
Great, Marlon. Glad to be here. And yes, the S&P is trading at like $6 a day right now. And I think, 2 years ago, it was like 4.5 maybe. But all stocks, I think, have probably increased their volatility by about 25% roughly. And yes, that Trump tweet is so funny. You know, I was teaching class today and students said, can the market really react? I'm like, yeah, all of a sudden Warren Buffett starts calling the trade desk because he read a tweet.
Right, yeah. It's remarkable. It's funny because there was a comment coming through here earlier, Tillie, and I made this comment when I was on Power Trading Radio, and I said I would love to, if I could be fully transparent, just to see all of the family members or anybody closely associated with the president, and because President Trump knows darn well that if he issues a tweet before doing a national press conference, a tweet outside of all regular events, and says that the stimulus package is off the table, everybody and their mother knows that market's going to crash. And I just would love to know who on his list he's calling up and saying, hey, you might want to look at going Hervé Villachez. That's short, by the way. Hervé Villachez, the market. To me, it's just kind of crazy to see these huge swings. And then, of course, today we got to bail out airlines and markets just soar. So the volatility is there. How are you managing it?
Well, I think that it's great. We offer, more return. The zones that we use to enter the trades are not too terribly hard to manage, and with the different position sizing techniques we can do. So the problem with too much volatility, it makes it hard to reduce risk to get into a trade. But of course, we love volatility because that's how we become profitable. And usually, if we can scale in with smaller size, if it's an area that we're trying to buy in. So 2 weeks ago, the S&P dropped down to 3,200. Yep. And then it ripped back up to 34.20. And so those swings are fantastic. And then though, to get into those trades requires more work, but with micros and smaller position size, it's manageable.
Yeah. It's partially the position size, obviously. The other part, I think, in the management of volatility is assessing, and I wrote this kind of in the description, is assessing stop losses and kind of how we set up our trades or plan things out. So you had talked with me pre-show about, specific tools or resources that you use to help mitigate that risk when we see markets increase in volatility by 20 or 30 or 40%. What sort of things are you using?
Measuring average trading range is very important. So average trading range gives us the idea of how much movement we have, and that's usually per day. But of course, we can look at it weekly or monthly. Daily is very important. So that gives us good expectations. We know how much to expect movement. And then, of course, if it surges, we know that there's a whole lot of activity there. It can be used to help calculate risk. So a lot of traders use daily range. If we're in a trade longer term, like the S&P from like 3,200 to 34, that's a big move. Mm-hmm. So monitoring the daily lows, that gives us an idea that, if that stock's trading $5 a day, you're going to be running a $5 stop to stay in that trade.
Absolutely. And I think, the challenge here for many people who might not be very experienced is you come up with a strategy that works well in a normal market, then all of a sudden things go haywire and that has to change. I'll bring up a chart here for you guys to look at. This is simply the S&P 500. You can see that back in February of this year, really wasn't a lot going on. I'll zoom out. I mean, the average true range for the S&P, let me get rid of this drag and drop tool. Average true range right in January of 2020 was moving about Why will you not give me the values there? It's funny, it doesn't want to give me the value on January. About 23 points a day. So 23 points per day, and that's when the S&P was trading right around 3,200. Well, if you look as it started to drop, that average true range spiked up to a peak of 233 points per day. That's almost a 10x type of return, volatility increase. So, Tillie was saying up 20, 30%. Try up 10x. When that happens, it's important that you change your stop losses and your risk management accordingly. So if I'm trading something that normally has a 15-cent stop loss, I may need to now look at something like $1.50 based off that 10x multiplier. Of course, that's on this index, the S&P futures. It's going to be different for each and every security, so you're going to want to use ATR to help you evaluate what modifications do you need to make with regards to ATR, right?
Absolutely, and there was a great question in the chat I read. Do I automate my stop with trail stops per the ATR? I have to do everything mechanical, but it is automated because when we hit a set price, so like when the S&P 500, and I trade a lot of spiders, and whenever I trade futures, we have to be much more disciplined, and I have to be very careful because sometimes trading with leverage, we can get a little gunslinger and start gambling and add a few zeros. So trading with the spiders, I tend to trade ultra conservative, and that's the majority of my trading because we can use daily measurement fairly accurately. So whenever we hit a target, so when the S&P hits a target, I'll use a daily trading range to trail those stops, and we use the lows and things. But automation, I would say the stop itself is automated because you put it in, it's good for days or weeks. But we physically have to go in and look at the highs and look at the lows and try to place it somewhere where we can stay in the market, but then not give back too much. Mm-hmm. So I think when the S&P hit 340 a day or two ago, right before we got to this 342 area, that's a time to be a little more conservative if we're long.
I'm trying to bring up the SPY here as you talk about that one. And to that point, Raj asked, do you automate your stop loss or trailing stops for ATR? Raj, one of the challenges there is most trading platforms, the complexity of default trail stops is going to be kind of backed down into one of two categories. Your trailing stop will normally be a specific number of points, so 50 cents or $1 or 2 points, whatever it is, or it's a percentage. So you would set your trailing stop at, let's say, 1%, whatever you felt comfortable with, whatever was appropriate for your risk tolerance and profile. That would allow you to have a fixed percentage that would change. And of course, your stop loss would get bigger as price moved up or shrink as price moved down. But there isn't any real default that's pegged to ATR. If you are looking for something that goes towards ATR, you kind of probably are going to need to find something that allows you to program in your own. And that might be a great thing. So I'll give you an example. If we look at this SPY, this is on a 15-minute time frame, and you can see that there's been massive swings on a 15-minute basis. Just yesterday afternoon, if you're trading off the SPY on a 15-minute basis, it was moving 40 cents. Well, then you move to, last night, early this morning, it was moving $1.67. I mean, you're talking an increase of 4 times volatility within a 24-hour window. So you could technically go back in and code a trailing stop that went to a percentage of ATR, right? Whether it's all the ATR plus some or whatever your calculation is. But you would have to program that in if you're going to do it off ATR because most platforms don't allow that sort of flexibility. All right, Tillie, so you had ATR is one of the things you focus on. I like that you mentioned that you're focusing on the dailies. You are predominantly a swing trader, right? The longer term, so it's not really going to impact you on like the shorter term time frames, the hourly or the 15.
Oh, it can definitely. So I do enjoy actively trading. Let me turn down this. We got some noise here. So I like to actively trade futures, like sizing up in the S&P with micro contracts. But I do that with a plan to try to stay in the trade. So the rally that we're having today is off of last Friday's low, and so whether we're trading like the S&P futures, the benefit of that is we can get into a trade in the evening. Mm-hmm. We can size up with micro contracts. So I actively trade futures, but my goal is to actually hold it if I can. But like we're talking about with this high volatility. If we have a market that rallies up, 50 or 100 points and you hit a target, taking those profits and maybe going to cash and waiting for another setup to the long side. I don't get very aggressive on the short side. Today we did have a short in the classroom. We shorted the S&P at 342 and some change. So I do trade short-term futures, but trying to position myself to stay in the long, and I am positioned long-term with options on the spider.
There you go. All right. I was actually typing in Tesla because I was just thinking to myself on how some of these other individual stocks have dramatic swings in volatility. And I think, it's just kind of fun for everybody out there, especially those of you who have never played with this. There's multiple ways that you can measure risk, right? A lot of people will look at risk and say, I'm using something like beta. Beta, for those that don't know, imagine the volatility of the entire S&P 500 index has a beta of 1. So if you're trading something that has a beta of 2, in theory, it's twice as volatile as the S&P 500. Now, while I like that, it doesn't give me exact numbers, which is why I really prefer ATR, average true range. As you are setting up stops on the daily basis, I prefer setting based off the daily ATR. I'm not a big fan of using intraday, but you do need to understand that typically the ATR is going to be much higher for equities when the session opens and when it closes and flattens out during the day. So just wanted to throw that one out there for you. And you can see it if you are new, just bring up different charts. I mean, look at Tesla's average true range back in February of last year was 7 cents. That's its average. This isn't Tesla. This is the Robinhood fund I like to make of Tesla. This is Tiziana Life Sciences. By the way, Tillie, do you know that one of the most added stocks to the Robinhood portfolios was TLSA because these Robinhood traders thought it was Tesla? They got it backwards.
Oh, wow. Yes.
Yeah. So yeah, it wasn't 7 cents per day. But back in January of 2020, it was $4. That's more reasonable. We were hitting a high in September of about $44 per share for Tesla on its ATR. So obviously dramatic swings, these things change very quickly, and as markets change, you will have to adjust your stop losses and your trade management, and ATR is a great tool for that.
Yeah, I think it's great. We can use ATR also during the day for very short term. Active traders trade different sessions. So there's the morning session on the open, which we know is extremely volatile, and a stock can trade its full daily range in that 1 hour. So we know we're going to get a lot of fast movement on the open as all the, think about all the order flow that's coming in to get the day rate. Big companies out there that are trading, they're going to leverage up because it's a lot cheaper to leverage up during the day. So all that volatility coming in on the open, and the reason we call it volatility is because the price is moving at such a high rate of speed, and we can measure that with ATR. So ATR is just the easiest way to measure volatility. Is it moving at a high rate of speed compared to other times of the day? During the day, I know, Merlin, you and a lot of guys, you all called it the doldrums forever.
Yep.
They call it the doldrums, like it's settlement. So think about it. If the market ripped on the open, it went up, 2, 3, 5, 10%, all those orders have to be settled. So whenever they settle, there's going to be a bunch of balancing and things go flat. And then, of course, after that settlement's over, the market's going to move in whatever direction, based on all the order flow. And then, of course, volatility can increase, and into the close, there's going to be a surge of volatility because, think about all those companies out there that have to cut their position size in half because the day rate now changed. So, 3 o'clock margin rates change in all asset classes, and that impacts position sizing. There was a question here in the chat about sizing up. Mm-hmm. Sizing up is when the position size is increased based on profit. So as the trader investor makes 1, 2, 3, 5, 10%, they're going to increase share size accordingly to cover that risk. And that's what these companies are doing all day, these big trading companies. So come 3 o'clock, there's going to be a surge of volume coming in with volatility as they're closing their trades in preparation for the overnight session. So most traders will pick a time of day they're most comfortable, or just do all set and forget trades where they're just anticipating that movement and measuring that range, the morning range, the afternoon range, kind of what their expectations are going to be.
Mm-hmm. Question from, it just disappeared. No, you had one in there, but we retracted it. All right, good. A bunch of questions. Joseph says, can you find volatile stocks with implied volatility? You could, but remember what Corey Lane said yesterday. Just because you have a high implied volatility, I mean, that would lead you to believe that it's very volatile, but relative to what, right? High volatility, implied volatility doesn't necessarily mean it's going to be great trading. It just means compared to itself. We looked at something that was very volatile like Amazon. It only had an implied volatility, I think it was 70 when Corey looked at it yesterday. And you think that's one of the most volatile ones out there. So I don't think it's a great gauge of volatility. One of the filters that we could use, certainly running through a watch list, is beta, right? Just run through beta and see what shows up as a very high beta there, and then go look at the charts, and that will probably give you something that's very volatile. But remember, it's a double-edged sword here. If you're trading something that's very volatile, that means that there's obviously lots of opportunity for the upside and downside. It generally means that it's going to be thinly traded, usually. If it's not thinly traded, there's obviously opportunity there. But remember, when we get drawn into something that moves too quickly, it's a dangerous thing. It looks exciting to begin with, but you could lose a lot of money very quickly. And until you have consistency, I'd say stay away from the very volatile stuff.
Absolutely. Wow, we call that gunslingers.
Yep.
And yeah, so what beta of 2 is going to have twice as much movement than the S&P. So on a percentage basis, it's going to move twice as much. So, that's a lot of movement. So a beta of 2 is going to capture, plenty of swings. Anything over that, really starts to get into some craziness. And that can be extremely hard to manage, unless you're just looking for something that's going to be a wild roller coaster ride. But if you're looking to really manage the trade and have targets and have stops, we need to have something that is easy to measure. And things that tend to have like a 2 beta are going to be enough movement, but not too much movement. It goes back to the Goldilocks and the 3 little bears.
Mm-hmm.
You got to find products that are just right, because you got to sleep at night when you're holding this stuff. And, big problem is that somebody gets into a trade and they don't realize how much it's going to move. And then they just turn into investment.
Right. Absolutely. Yeah. The long-term holders. GD sends in a good question. Says, aren't our OTA stops put below DZ for longs or supply zones for shorts? That's a tricky one because you're looking for that area of higher probability of where those buyers and sellers are lining up, right? But you probably have noticed that when markets go haywire and have a lot of volatility, those levels can be violated rather quickly. And that's a reflection of that increased volatility. So while I would say yes, GD, in a normal market where things are kind of going smoothly and have a kind of a normal cadence to it, if all of a sudden volatility spikes and things really get out of whack, you probably aren't going to want to put those stop losses at that point anymore. You may be looking for a zone that's further out. So it's not that our stop doesn't need to go below those demand zones. It's that we may need to pick a deeper demand zone because the volatility is so high, if that makes sense. That's why you always want to evaluate your stop losses here. And to me, it goes right to what the title of the show was for today, which is, measuring volatility for better trading. It's reducing the risk exposure you have and also increasing the probability that you're not going to get stopped out. That's the whole goal of setting your stop losses appropriately, and ATR can help you immensely there. Raj Tillie says, do you trade stocks or only ETFs? Is your trade management the same for all products? Great question.
So this week I did short APA. I trade stock for sport.
For sport, we say?
Yeah, for sport, for fun. So I'm not trading big share size, and I'm not looking to hit any numbers. So I like that I say it's like a sport, Mm-hmm. I trade ETFs and options and futures to manage my accounts, looking to hit some numbers. And that for me is more efficient, more stable, more predictable, if you will. But then to have some fun, I'll trade some individual stocks. So I think I was analyzing APA. I was using Online Trading Academy has a stock screener. Mm-hmm. Because if we use FinViz, we're going to be looking at thousands of stocks. I think I ran it today on FinViz, looking for stocks that meet this criteria of price per share, volume, ATR. And it was 6 pages of stock. And so Online Trading Academy has a market screener. It's an algorithm. It lists them obviously based off of trends. And that helps a lot because if it's bullish or bearish over time. So APA, I think, is Apache. Mm-hmm. And I got a short in on that at 1027 off yesterday's high. And just one of those stocks that as I was looking through all the stocks, the market screener, it really caught my eye to have clearly lower highs and lower lows. So one of the reasons that we love to teach is that we get to analyze stocks in a team environment, with other people. It's a lot more fun than staring at charts by yourself. So I just noticed it was in a very, this is a funny word, a strong downtrend. It's always funny when you say that because the word strong, you think of strength, but it's weakness. Mm-hmm, so right. Going down, dropping like a rock. And there's a clear as day break of a low at 1027, and that was yesterday's high. So I think the trade was put in on Monday, and it filled Tuesday morning. I hit the target today, Wednesday at 950. And so, yeah, I will short for fun, like stocks. I'll buy stocks for fun too, but I'm not looking to really manage stocks. Well, for one, the taxation there. So, I've got stocks in some of my retirement accounts, and they're more, buy and hold, if you will, because, I don't really want to trade them actively and deal with the taxation. Mm-hmm. Taxation is a lot easier on ETF, index options, and futures.
I'm watching this. I have it up here right now on the screen, and I love Apache. By the way, it's actually a great song. If you guys want to see a great song, type in it. I think it's called Apache by the something Bongo Band. I'll look it up here in just a second. But Ab V says, nice, Tillie. APA is following textbook area of interest, and if you look at this is a beautiful thing. If you look at the chart that started back in March, these March lows were double bottomed, and then basically did nothing but make higher highs and higher lows for the next 6 months. And, this is where you're just buying the pullbacks, right? This is classic definition, turtle trend trader stuff where you're buying the pullbacks into demand or whatever logic you have of buying in the pullbacks. And then all of a sudden something happened. Right in the middle of August, it broke that uptrend line and formed a new downtrend. Now all of a sudden, it's a series of lower highs, lower lows. So, Tillie's short is right on here. You could have done a short on a pullback. In this case, it looks like Tillie went short on a break below some lows. There's a lot of opportunity in these things, and normally something like Apache wouldn't make my radar, Tillie, but this is, again, the beauty, like you mentioned, of teaching, because we have the opportunity to not only work with students in classroom environment, but also, looking at the filters, the scanners that someone else might bring up. So thanks for bringing that one up for us.
That was great. So a question here about, did I ever trade penny stocks? So where, I grew up in Houston, and Houston, like the oil and gas business, really, I think, brought something to my attention that there's, business products, and, like gasoline and oil and gas, there's all different kinds of, crude oil out there and whatever, but it all comes down to some really primary, products that we use in the business, and gasoline. And so whenever I started learning about the stock market, I started thinking there's got to be a lot of products out there that maybe are something that people are interested in, but maybe not professional products. So rule of thumb, mutual funds, a lot of people bash them. And of course, mutual funds are not the most efficient. They do not perform the best. Mm-hmm. But a lot of people wouldn't save anything at all if they didn't have a contribution plan. So it's a good, quote, savings plan, and that's what it was designed for. If we want to hit some numbers, we need to be more efficient with ETFs and derivatives and things like that we can really measure the expectation for the return. So penny stocks. Are penny stocks likely to be bought by professionals? If a product is not being bought and sold by professionals, meaning if it's not going to go into a mutual fund and they're not going to sell it to retail, then how are we ever going to be able to position ourselves to trade alongside or do what the professionals do? So my rule of thumb is, if it's not good enough for the S&P 500 or not good enough for a professional fund, then it's not good enough for me. So until a penny stocks proves that it has enough investors, so there's accumulation on the price chart. If Warren Buffett's buying it, there's going to be enough accumulation there that we can see it and we can make sound decisions. But most penny stocks that I've seen look like crazy. Those popcorn trades that Merlin talks about. Mm-hmm. Look at the chart, and it's just bouncing all around. Even if you put your order in, it's like a roach motel. You can get in, but you cannot get out.
I like that one, Tillie. That was I'm going to quote you on that one. There was as far as me trading penny stocks, I'm going to just say it this way. Did I trade penny stocks? No. I would say I've never traded, meaning actively got out there and said, okay, I'm going to be back and forth buying and selling these ones. It's basically been a shot at the dark, the high-flying chance, a little bit of hopium type of trade, and it's in a specific account where I can do that type of thing. That account has not performed very well, I'll be honest. It usually doesn't do very well because a lot of the penny stocks you're buying are just gambles. Someone asked me about a company today, FBASF, and I didn't write down who said the question, but FBASF, take a peek at this chart. This is a 90-cent stock that since March has done absolutely nothing, completely flatline, and it has extremely low volume. This is Deutsche Bank Mexico REIT. Well, look, I don't know much about Mexico's real estate. Not really my area of interest. Don't particularly. It doesn't matter whether I like it or not. But look at the volume here. It trades 31,000 shares per day. I would call this a penny stock, and this would not make my radar. First off, it's doing nothing but going sideways, and second, it's real cheap. It's a gamble. I'd rather find something that looked like Apache, which has a nice, fairly predictable trend. If you want to gamble, go to Vegas. I mean, that's really what penny stocks are, in my opinion, because in my experience, you could make 20 trades on penny stocks, 19 of them are going to fail and go to zero, and one of them will do really well, and you brag about that one winner. Tell you what, if you have that kind of batting average in baseball, you're not going to last very long. Bragging about the one winner and 19 losses. I mean, that's a recipe for failure. I'd rather put myself in a position where, even if you're right 33% of the time in baseball, you're going to the Hall of Fame. If you bat .333 in baseball, you will end up in Canton, Ohio with a statue and a plaque because you were amazing. In trading, .333 sounds horrible. But with the right reward-risk ratio, it's possible to do really well. And of course, you want to have better than a 33% win ratio. But to me, penny stocks are a total gamble. If you do, go into it knowing it's a gamble. You're hoping that someone's going to buy them or they're going to get acquired to become the next Apple. It's so rare for that to happen. Just leave it alone. There you go. That's my rant. Penny stock. Well, Tillie just gave us the term trading for sports, so I guess Tillie approves of sport on penny stocks. I think Tillie probably has the same opinion that it's a high risk, high reward venture.
If I'm trading for sport, I still want to win. So penny stock would go more in the gambling category.
Yeah.
You're going to Vegas and you don't even know any rules to, like roulette, 21. You don't know any rules. You don't know the statistics of a slot machine. So I think a penny stock is. One in how many thousands of those ever make it to market? Mm-hmm. So if it's not being traded by the big boys, stocks can be cheap. We can get good stocks, if you will. I mean, relatively good for, $5-10, and they're going to have enough movement, like Apache's cheap, that we can trade them. But that's really why people trade with leverage. Mm-hmm. So we can control an asset that would be expensive for a bargain, for pennies, if you will. Mm-hmm. And that's why we trade like micro contracts of the S&P or the NASDAQ, because you're really getting like a penny priced product. You're paying pennies for a product that would normally cost dollars. That's why we trade with leverage. Yeah. Trading currency markets, we can trade very, very small size. And those little teeny tiny mini and micro lots, it's like a penny stock because it's cheap. Why would you trade a penny stock? Because it's cheap. Well, what are you looking to gain? You're looking to make some money, right? So the only way to make money is if you can pretty much determine the probability that it's going to move. And I promise, if you're the only one out there trading it, it ain't moving.
That's true. All right, these guys called me out on something. You're right. I forgot. Football is Canton, Ohio. Cooperstown is baseball. My bad, and you're right. Unfortunately, Pete Rose should be in the Hall of Fame. If some of these other guys can be in there for steroid usage, and then Pete Rose should definitely be in there. All right. Isn't it true that unless the stock is greater than $10, fund managers don't include them in their portfolio? I don't know if that's industry-wide standard approved, but I know that many mutual funds do have a floor where they'll say we're not going to put anything below X value in there. And I saw from Austrian Hispanic. You said thoughts on Flex technicals. You bought some. Looks like you said you bought some Flex. Oh no. Okay. So I'm gonna bring up Flex here real quick, Tillie, and I don't know if you have a chance to look at FLEX on the screen. And I actually thought, Austrian, that you were gonna maybe talk about this being a penny stock. I wouldn't lump this into a penny stock category. I actually technically. I like it. It looks just like the market, although the market's at all-time highs. What's noteworthy about Flex for me, without even going through a levels or zone analysis, is since March, you've got a nice stair step of higher highs, higher lows. So, it's been accelerating over the past 7 days. You're right at some supply levels, but all in all, from a technical perspective, I would say I'm intermediate to long-term bullish. Short-term, I'm actually bearish. Tillie, what do you think?
Let me take a look here. So it took the platform a few minutes to load it.
No problem.
I thought, Flex, you were going to start showing us some muscles.
No, I don't have any muscles. Sorry.
So are we thinking long-term or short-term? Kind of what's the time frame?
It didn't give us any input there. Just thoughts on the technicals of it.
Well, it's rallied since September, an even lower low in earlier September. So since September, it's been in an uptrend, making higher highs and higher lows. It has, though, hit an area where there was a significant high back in July. So let me go a little bit bigger picture. So it looks like it's trying to show some strength. Let's see what it's up against. So on a weekly chart, it does look like it's showing quite a bit of strength and may attempt to push higher, but there's quite a bit of overhead selling at 1250 and then up ahead at 13.25. So just realize that, the faster it goes up to those areas of selling, 1250, then the faster it goes up, the faster it goes down. So, it does look strong as it retests some highs. It's got the highs of July that are $12.15.
Yep. Which is right, and we're right there. Like it's really struggling with those highs. I mean, I could draw a horizontal line across here, and you guys can see it's challenged because for the last couple of days it smacked against it. Today it actually broke above it, but then came back down. It finished at 12. So you get above that 12.14 mark. I think Tillie's right. You probably have smooth sailing up till about 13.25, which is that next area of distribution. So to me, it looks good. I like it. Certainly better than some other stocks I've seen lately. Yes, as volume is decreasing in this rally, that's not necessarily a bad thing. What will happen, my guess here, Harrison, is if we get a close above that 12.14 mark, you'll see volume spike up because it'll be a breakout trade for a lot of people, triggering a close above that. The good thing is you do have over 2 million shares traded per day in Flex, so that's a good component as well. Tillie, while we're on it, I'm going to bring up a screen here. I think I can bring up a screen here. This was a question that was asked yesterday in the chat, and I can't remember who it was, so I just put TM viewer, so TraderMerlin viewer. Sorry, you don't remember who sent it in. Could you give me your thoughts on CMI? I had the chart up here, so I'll bring it back up for viewers. And I'm going to let you start with this one since I just decided to just not stop talking and ramble through the last one. But CMI is Cummins Incorporated. You guys can see a pretty great-looking chart here. What's your thoughts on Cummins, just from a technical perspective?
Okay, I'm loading my chart here. So I like to usually start off with a few different time frames, maybe a 4-hour chart, maybe a weekly chart. Just depends on where we're at and what we need to see. So coming off of the lows from early this month, October, and it has been holding those lows since September. So it's very bullish. It had a breakout on the 5th. So a very bullish breakout. And I'm looking at a 4-hour chart. I mean, you can probably see that breakout in almost anything because it clearly broke out there on the 5th. And it's pushing higher. So now the question is, what's overhead to slow it down or prevent it from going any higher? So I'll usually go out to a weekly so I can kind of see where it's going. So what the important thing to recognize, if big companies are buying this stock, they're buying it for one reason only, and they're buying it so they can sell it. So if we can pinpoint on the chart where they sold it in the past, these companies that do this kind of business, where they bought and where they sell, we call it the footprint, and it looks like this might be at all-time highs. What do you think? I think if we're at all-time highs, it's got a clear breakout, and we'd be looking for pullbacks.
Yeah, all-time highs for sure.
Yeah, so this is like straight out of the gate, and the biggest high it broke was at 193, so a little, kind of expensive. So with that kind of breakout, we'd be looking to buy pullbacks, and unless selling comes in and it breaks the low, then that would still maintain its strength. So very strong stock there. I like to look at that stuff on a low time frame too, hourly charts, 15, 5.
Just for the viewers at home, this has, I agree, Tillie's spot on. And I think it's really interesting when you look at something like the monthly to see the trends here. And just look at this price chart and look at the strength and how frequently it has runs where it goes month after month after month of either gain or loss. We can go back into 2014. You can see, except for this 1 month right here, it was like 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 months in a row of losses. When all of a sudden, it has another huge run-up of month after. And right now it's on a 1, 2, 3, 4, 5, 6, 7-month run that's just parabolic, and 4 months before that of just straight down. So one thing you also want to understand that I thought Tillie brought up was really important is institutional ownership, right? Some of these stocks have very little institutional ownership. Some are going to be very heavy. Cummins, as I bring it up here on Yahoo Finance, has an 85% institutional ownership. That is huge. That means that really the only 15% of it are out there for the retail population. So That's a very bullish sign for an equity. If there's very little institutional ownership, not only does it mean that there's no interest in the company, because if it was going to be a good company, the institutions would want to own it. The second part of that is when you don't have much institutional ownership, that it's left up to the devices of the retail population to move it. And that usually means pump and dump, which is something you want to shy away from. So there we go. All right, got CMI done. I'm still trying to figure out, Ed in San Jose says the over-under score. He's been running a tally on me for something. I'm not sure what I do. Is it every time I sneeze, I say I pick my nose? What's the over-under on? Because I'm going to blow out that score if you tell me what it is. All right, Tillie, tell me about what's going on out in Kansas City. I know that you guys, are you back to physical classes now? Are you doing the connected classroom thing?
We have classes in center. They're very small. I think we only have 6 students here this week, and so there's a lot of space. That's great. And, online Trading Academy, if you guys have ever taken classes, you know that usually the centers, they have a ton of food. And our nickname is usually Online Eating Academy. But with the stinking pandemic, everything is individual lunches and not near as much fun. So they're having a great time trading, because with only 6, 8 students in the class, we have time to really think through things. We can help each other out. And this week I have fantastic students, a few engineers that are very fun, imagine that. And the way they ask questions is very conditional, like if, then. And I love it whenever I get questions that are very open to really a genuinely, open question as to if this, does this mean that? A lot of questions like that. Sometimes we get questions and the person asking the question, they don't realize that they already have a very strong opinion. Mm-hmm. So they're kind of like telling you what they think the answer is in a question, which makes it really hard to answer a question if someone's really telling you something. And but we're having a great time this week.
It's funny when you look at the different types of learning. I did a presentation yesterday with Bob Dunn and Bill Henner, so some Chicago floor traders. By the way, you guys can find that archive video at Online Trading Academy's YouTube page. Go Online Trading Academy; it should pop right up there on the top. It was kind of interesting because Bob didn't mention it in yesterday's webinar, but we talked about the story many times on the type of students who learns the best, and he has a story about a guy who was literally a brain surgeon, right? And here's a guy who you think a brain surgeon. Here's a guy who is paying unbelievable amount of attention to detail. You would think following the rules, and for some reason, this guy just did nothing but lose on the floor of the Chicago Mercantile Exchange. And yet you'd have somebody who is a total doofus, right? Somebody, you just look at that guy and go, that guy's an idiot. He doesn't know what he's doing, would absolutely crush it. And it just had to do with discipline, the ability to follow rules and learn from those mistakes. So I think it's a very telling story, in my opinion, that anybody can do this if they follow rules, if they have plans in place, and most importantly, they don't take that colossal loss. And we talked about some of the things today, which are looking for high volatility stocks. That's where those colossal losses can come in, guys. It can be very, very dangerous. And Tom says engineers rule. You engineers, you're some of the worst students. You're some of the worst students.
They literally rule because they measure everything.
I know. It's funny because engineers, like, Tillie, you've probably experienced this too in your time. An engineer, 1 + 1 is always 2. It has to be 2 because that's a structure for everything is built off of simple math. Whereas in trading, 1 + 1 is any number that it needs to be at that moment in time. That's the challenge of trading.
Well, I love engineers that really, they think in a very process way, which I love very much. But so you're talking about which profile tends to have more discipline. Some engineers get really uncomfortable because of the said degree of variance. And like you're saying, 1 + 1 is not always 1 in the market. So kind of finding that fuzzy logic where we use, that's how the air conditioner works, where there's not absolute perfect math, just, roundabout, if you will. And because, order flow is always coming in and out, prices can get averaged out, 3 zones can become 1, things like that. And so recognizing that and using math-minded and rules is very important, but also allowing the market to really reveal its personality and kind of interpreting that. So there was a question there about institutional money managers and what they trade. Mm-hmm. There are companies out there that trade stocks heavily. So the question was, do big companies out there, institutions, only trade derivatives? Well, they're part of their portfolio likely, but many of these portfolio managers that manage money for clients are managing stock, if you will, because they're choosing which, mutual funds, which are stocks, are in their clients' portfolios, making recommendations. So stocks are a big part of and the S&P 500 is stock.
Mm-hmm.
The ETF itself is holding that stock. And just if a big company out there wants to manage individual companies in their portfolios, they'll still likely have to use options and futures to hedge. That's a big popular thing with stock traders. So it's a little bit different style, I think, of portfolio management when they have a heavy load of individual stocks. I know a few portfolio managers that use stocks heavily,
mm-hmm.
and then they have to use futures and options for hedging.
I think it all depends on the firm, the objective of the firm. I mean, there's different types of firms as well. So obviously these big institutions are trading everything out there to reach their goals. All right, Tillie, one question came in from GD. Says, are we going to see Tillie on OTA online classes anytime soon? You teaching online?
Well, I hope so. I met all my criteria. I did all my teach backs. And so I am not sure. I'd love to. I hope I hear from corporate about that.
Here you guys go. So we can have the viewers help out there. If you guys want to see Tillie do some online classes, just email corporate and be like, hey, we see Tillie all the time. We love her. We want to see her do some online classes. It's, we'll get you out there teaching online, Tillie. I think you do a great job.
I passed all my tests. I didn't use any dirty words.
Oh, well, I already failed that test then. Son of a... No, sorry. All right, Tillie. Well, thank you so much. I appreciate you coming on short notice and giving us some insights into, measuring risk, volatility, using ATR, and always a pleasure having you on. I guess I'm going to have you on next week, right? You're on next week, too.
Yeah, great to see you guys. I love all the questions. Great to be interactive. I love the show. So we'll see you next week, guys.
Awesome. Thank you, Tillie. Take care. Guys, that was Tillie Allison. She is in the Kansas City office. She's going to be teaching some classes out there as well. Not online yet, but you know what? If you want to help her out, contact your center and be like, hey, let's get Tillie Allison online. I think that way, and I think that's part of the reason I love doing this show. If there's somebody that you see that you really resonate with, and there might be people you don't like that come on the show. I get it. I'm trying to be objective. Of course, you guys know there's only a handful of people I will not allow on this program ever. But hopefully, and this is kind of the same point with Power Trading Radio, was giving you the ability to look and go, hey, you know what, I really like this person. I just connected with their teaching style, their personality, their strategy, whatever. And then, if they're Online Trading Academy, you can always go to OTA and be like, hey, I saw this guy on TraderMerlin show. He's fantastic. Bring him back. I want to teach classes either at my physical center, as that's going to start booting back up. I know it's already starting in different locations, or online as well. Oh. I said, what did I say, or and? What was it, Ed? What bad thing did I do? And? Let's see. I want to go to a couple more questions here. So we're not done yet, Ed. I could totally eclipse your total. There was the thoughts on CMI. That was one question that came through. I also want to get to this one. I think I talked about this yesterday for Eric. There's two. Hyliion, IPO, and DraftKings. I really want to just touch on those very quick. So you guys might not know, the Hyliion is another truck company. My opinion of it is this is just an industry-wide ploy to get more people into, or just to make a bunch of money off these electric vehicle type of stocks. Notice what happened. This is the monthly. If we go to the .D, ever since this thing, quote-unquote, went public, it's just done nothing but go down. And I don't see that changing anytime soon. Anytime soon. It will probably continue. My guess is you'll probably see this thing drop down to about that $20 mark. So don't get caught up in the hype with these ones, for those who are asking. The other side of this was Todd asking about DraftKings, which is DKNG. Again, I'm very bearish on DraftKings right now. A couple days ago, they talked about selling more shares, and the 32 million more shares come to market. So again, because of all the sporting events that's going on in COVID, I think that this could actually drop down. Yes, I think it could drop down much further here, especially once these up and we're left with just one or two. DraftKings is going to be hurting, so be careful with that one. I think it was Jeff, someone sent me an email. They were selling some puts. That's fine. I'd be more interested actually at this point in buying puts, because selling puts means that you want to own the stock at a certain price. DraftKings, I might be an owner at 35. But other than that, I'm not a big fan of being an owner of DraftKings or that Hyliion. And Joseph says, electric vehicle ploy, not play. Well, I don't know. I mean, that's the challenge. The Hyliion stuff, or however I'm pronouncing it wrong, again, you never know if that's going to be the next great one, but isn't it interesting how in the past 6 months, we're seeing a lot more of these companies come to market, right? And right away. And this one did not come through traditional channels. It's a SPAC, a special purpose acquisition corporation or company. And basically these guys are backing into existing companies and passing a lot of the regulatory stuff. My guess is if they try to do a traditional IPO, they may not make it based off their financials. And that's just my personal take on it. Is a lot. If you hear that something is a SPAC, an SPAC, I would say be very careful with those because they have circumvented rules and regulations by backing into an existing corporation and not going through a traditional IPO process, which would have audits and more analysis of the financials. So to me, those are going to be very curious companies to buy into. You know, Nikola. I'll bring up Nikola stock. I haven't looked at Nikola in a couple of days, but here's Nikola. Back to $25. Well, this one got a bunch of fanfare back in July as it broke $90, and here we are slowly starting to drop down. Some of these may be the next great thing, and hopefully they will continue to power through and make great changes for our society, because I personally think that I'd much rather have a hydrogen car or an electric car or something that's going to get me, 1,000 miles on a full charge. Great, let's do it. But it is, again, as Tom just points out, he goes, electrical vehicle market is small and growing slowly. Supply and demand is rapidly, supply products is growing rapidly. Right, and that's why we saw the other day, we were looking at a lithium company that just went parabolic because of battery day with Tesla. We'll probably see in the next, couple of years, a lot of these startups consolidate down, and there will be a few of them. But remember, these are all startups. I think the thing that's being overlooked here is, where's Toyota? Where is Honda? Nissan? They've been there, but, they haven't. I don't think they've done the full court press. I think that if you got Toyota making a full court press in electric vehicles and one away from the Prius, I apologize to those of you who own Priuses. I just think they're a hideous looking vehicle. But hey, you have 35 miles a gallon. I think you'll see a lot of the competition, the startups, disappear. I think what's happening, in my mind, I look at this electric vehicle space like what you had with the Hyliion, for example, or just vehicles. If someone comes up with a great idea for a vehicle and creates a prototype model, you're basically giving Toyota the ideas. They can look at that and go, oh, that's a great one. Engineers, I want you to build something that looks just like that, and you got 30 days to do it. All right? I think that you ultimately see something like that happen, and all of a sudden some of these companies just disappear. So be very, very, very careful with it. Hydrogen vehicles will give you a 30,000 mile range before replacing a cell. I'm on it. I would love it. Bring it on, man. I would love to not have to go to a gas pump. But that's just me. All right. Did I do it? I think I may have. Let me see. Just make sure I put it in here. The economic calendar for... I didn't. I wasn't sure whether I thought I might have failed on that one. All right. Here's your economic calendar for tomorrow. We have not a lot of really good news. I mean, you have unemployment claims, which has been coming out every week, and that number has been steadily dropping, right? We've seen that number drift below the million mark. Now you're looking at it getting to about 820,000 is the expectation, so I would keep an eye on that one. Other than that, there's not a lot of major economic stuff. I'll highlight in red for you the U.S. You got the 30-year bond auction. The 10-year bond auction was today, and we actually had a little bit of a spike up. I think we're running at 77 basis points for the 10-year, which, I think personally, I do believe that's noteworthy. We were looking at that 50 basis point mark, and all of a sudden it's slowly kind of getting away from us on that 10-year. What else do I have for you? We have GDP numbers coming out for the British pound. That'll be a good one. If you're trading the GBP, of course, you gotta be careful with that bad boy. I'm trying to pull up a calendar here for you guys so I can see some stuff. I wanted to talk about our show for tomorrow, because this is pretty much your economic calendar. Tomorrow we're going to talk about something completely different. Tomorrow I have Matt Leasing on the program. I hope I pronounce his name right. It's Leasing or Leasing. I'll make sure I get it right for tomorrow's show. But he wrote a book about Ethereum. And it's an interesting story. It's an interesting perspective. And I thought it might be nice to bring him on the program. He'll be our guest tomorrow. The book is called Out of the Ether. You guys can check that one out on Amazon. It kind of talks about Ethereum and some of the history behind it, which I think is also very important. He's a reporter for Bloomberg, so we'll have him on the program tomorrow to talk about understanding Ethereum and the book Out of the Ether. If you guys have any comments or questions that you would like me to ask him on tomorrow's show, I'd encourage you to send those on in. You can go to TraderMerlin.com, send them in there. You guys have been sending in a bunch of questions. I appreciate that. You can also go down below the YouTube video and type in your comments and questions there. Don't worry, I filter out all the weird spam stuff that comes in all the time. It's just ridiculous. You can also click the thumbs up if you like today's show. If you're interested in Tillie Allison teaching classes, she's going to be in Kansas City and maybe online. Of course, you guys can request that at your local center. That will do it for me, everybody. Thank you so much. I will see you tomorrow talking about cryptocurrencies. Take care.